Today, I want to talk about how banks like New York Community Bank are desperate for cash to avoid another banking crisis, which would cause a meme 2.0 event over the next few months. So stay tuned and let's make some money. Later in the video, I also want to touch on something different, which was an S&P 500 put option that ran for 300% that we took on Friday in the Millionaire Mindset trading group. In the group, we don't just trade small, fast-moving momentum news plays, we also trade options, both short-term and long-term. So there really is something for everyone. But now I'll dive straight in with the key information. So, this article says that New York Community Bank's online arm is paying the nation's highest interest rate. So on the face of it, we know that New York Community Bank are desperate for cash. They've suffered tons and tons of withdrawals, and they've also taken on heavy losses. To combat some of those withdrawals, they're obviously desperate for more deposits, as well as that $1 billion lifeline they received from a number of hedge funds, institutions, and banks like Citadel. As a way of increasing those deposits, they're now offering the nation's highest interest rate, obviously desperate to convince more people to deposit cash at New York Community Bank. And again, to show how desperate they are, they're not just offering a slightly higher interest rate than other banks out there. They're not offering the top 10 highest interest rates. They're offering the nation's highest rate. Obviously, in the long term, this is going to be significantly more expensive for New York Community Bank paying out such a high interest rate, but it really shows their near-term desperation for more cash. The article says New York Community Bank, the regional lender that needed a $1 billion plus lifeline last month, is offering the country's highest interest rate for savings accounts. NYCB raised the annual percentage yield offered via its online arm, My Banking Direct, to 5.5%, higher than any other bank's widely available account. And as I said word for word, the standout rate could be a sign that NYCB is facing funding pressure. He said it looks like they're trying really hard to attract deposits. My Banking Direct has been around for a long time, more than 10 years, so them having an aggressive rate could be a sign for neediness. It also says among other established banks, the average high yield savings rate is just 4.4% or less, and some of them have even dropped rates in the last month. So the fact NYCB is paying not 4.4% or less, but 5.5% shows that desperation. And Ryan has also tweeted saying that New York Community Bank is still taking another beating, with their stock down another 7.7% to less than $3 per share. And he asks, when is NYCB going to need another $1 billion infusion? The last time I touched on NYCB, I compared NYCB to First Direct. When First Direct received that bailout or cash infusion, it only took them another month before they collapsed. So far, NYCB has survived just about a month, and a collapse may be imminent, especially if they can't attract the required deposits they need from this boosted interest rate. It doesn't look so great for them. Now, on top of that, another article says that UBS is also on the brink of Switzerland's too big to fail reckoning. So it says since UBS rescued its stricken rival Credit Suisse a year ago, it's been waiting to hear how authorities will protect Switzerland from the risk of the country's only remaining big bank also imploding. So it seems Switzerland is now trying to figure out not just how to bail out Credit Suisse, but also how to bail out UBS, or what to do with them if and when UBS collapses. Looking at the numbers, the Swiss regulators have said that banks in Switzerland need to hold at least 15% of their assets in available capital. But UBS, on the other hand, only currently has a 4.7% ratio. AK suggesting UBS does not have enough capital, nearly enough capital to survive or meet the requirements, and therefore may end up soon being margin called. Again, just another bank that's desperate for more capital, more cash, and survival. As I mentioned at the start of the video, you can see here in the pre-market, I told the group I was watching the $512.09 level on the S&P 500. That's acted as tough support over the last few days, and I knew if that level broke, put options would be a great choice. You can see here in the morning, the S&P 500 originally bounced off this $512.09 level, but then fell through that level later in the day. Both Snowbird and PPK took these put options and they ran from 50 cents per share to $1.58 per share for over 300% gains. So guys, if you want to be making 300% gains on options, be sure to join the Millionaire Mindset Trading Group using the link in the description below. And that's why 741 Trey has tweeted saying his prediction is that the market will see a meme 2.0 event in the coming months, saying the Fed will act as if they haven't been preparing for the last 3 years, blaming the Swiss regulators and their handling of Credit Suisse and the fallout. We'll likely see UBS collapse and the Fed will effectively blame the meme event and the GameStop and AMC squeeze on their handling of Credit Suisse and UBS. They'll go through the previous UBS Credit Suisse headlines and pick out how UBS took on such significant unexpected losses as a result of the acquisition, saying that UBS wasn't expecting to find what they uncovered in Credit Suisse, didn't know how to handle it, and that's what resulted in the AMC and GameStop squeeze. And most likely they'll also say thank goodness the US banking system is so resilient. Now, I also note over the last week I've been touching on how AMC's short interest is now at all-time high levels. We've seen the short interest per Ortex over the last few weeks and months going from 16 million shares shorted to now over 53 million shares shorted. And even with Stonks Batman's chart adjusting the previous data from Ortex and from Fintel for the reverse splits, for the conversions, for APE and for everything else, all-time high short interest is still at an all-time high. Shorts are shorting more shares right now in 2024 of AMC than they were in 2023, 2022 and 2021. Obviously that suggests the shorts never closed out of their short positions. Adam Aaron never sold shares to the shorts for them to close, and instead they've added more to their short positions. That's facts and that's evidenced. And 741 Trey has also tweeted now that the New York Stock Exchange reports that GameStop's short interest is now at 65.69 million shares, or 10.3%, which is the highest since February of 2021. So again, it seems the shorts haven't just been adding to their AMC short positions, pushing the price of AMC down by shorting more shares, but they've been doing the exact same thing to GameStop. They've been shorting more shares of GameStop as well, and therefore the reason why the GameStop share price has fallen alongside AMC's is due to more shorting. It's not due to retail investors selling, it's not due to the companies becoming worse and therefore the stock price decreasing, it's not due to supply and demand, it's due to more shorted shares. Again, this is the highest number of shorted shares seen in GameStop since short interest was over 100% back in December of 2020 and January of 2021. Again, suggesting those shorts are in even more trouble because they've not just been shorting more AMC shares, but also shorting more GameStop shares too. There's also this article that says hedge funds have been selling stocks at the fastest pace in 3 months and have been stepping up their short bets. It says the professionals sold global stocks on a net basis for a second straight week last week, driven almost entirely by short sales, aka another article proving that hedge funds have been shorting more shares, not just of AMC and GameStop, but of the entire market. So it seems some hedge funds out there are now preparing for a stock market crash, again something I've been speaking about for a while now. And again, Biggums has also tweeted about how Citibank is laying off even more staff, which I touched on a few months ago. It says Citibank has now cut 7,000 people so far, which is 2,000 already more than expected. So again, not just New York Community Bank, not just UBS, but other banks out there like Citibank are still struggling and are still increasing layoffs. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.